Hello, hello, hello. Matt the Mortgage Guy here. Wanted to make a video following up with what I alluded to last week. The Federal Housing Finance Authority wants to say Happy New Year. They're going to be charging more for second homes and high balance loans come April 1st, 2022. They're back at it again. They did it back in 2021 in March, I believe, and then reversed it come September. Well, they've got a new framework in place. They've got some new things that they're planning on doing in 2022. I wanted to bring it to you with a little bit more detail than I shared last week. How much change this is going to be, my thoughts on the reasons behind it, what they've actually said and quoted. And I'll read you another article here where they've talked about why they're making a change like this. And so we'll jump into it. I'll give you some feedback on how much of an effect you're going to see, what that's going to mean for you, how it might affect first-time home buyers or how they want it to affect first-time home buyers, and all that good stuff. Before I jump into it, if you like straightforward content from a mortgage broker who's in it all day, every day, talking to consumers, talking to real estate agents, talking to other mortgage professionals, bringing it to you in a straightforward and easy to understand fashion, please consider like, comment, subscribe, do all the stuff for the YouTube algorithm. I appreciate you. Now let's jump into it. So FHFA, Federal Housing Finance Agency, announced last week that come April 1st, 2022, second homes are going to be more expensive and high balance loans are going to be more expensive. When I say more expensive, the rate is going to go up. It's going to depend on the loan to value and some other factors, how much it's going to go up, but it's fairly significant. I don't know if it was this article or the other one where it talked about how much, but 4.125 points on the 10 and 15% down in, second homes is huge. Right now, you could put down 10% on a second home and you can get terms that are really similar to an owner-occupied loan. So just as an example, let's use 3.25%. Now, if you could get 3.25% today on one of these and you're putting 10% down, if you add 4 points to the cost of this is what's going to happen. Either, let's say you're buying something for $550,000 and you're putting 10% down. So you're going to be borrowing $495,000. 4 points or 4.125 points is about $20,000 in cost for that same 3.25. Or you don't want to pay all that upfront $20,000 in points. That rate probably slides up to somewhere near 4% or higher, right? So it's a big change. It's not like a little, there's tweaks that are made day in and day out in mortgage. Well, it might tweak something a little bit. It's 25 basis points here or 50 basis points there, maybe affect something an eighth in rate. This is a huge, probably a full percent in some cases, change in rate on a specific product. In the other article that I'll jump over to, they talk about why they're trying to provide more access and more affordability to first-time home buyers, to low-income buyers. And so what I read is that they're going to pass that cost on to other loan programs. The second home loan program being one, high balance loan being another. They're assuming, and probably rightly so, that these are more well-to-do buyers. These are buyers that can afford to pay a little bit more. And in turn, they're going to, use some of that money and resource to make it more accessible to first-time home buyers, to low and moderate income buyers, which is something that this administration has made clear they want to make a priority, right? And so there's talk that these new adjusters may help lower other loan level price adjustments. When you hear loan level price adjustments, LLPA is the acronym for mortgage folks. That just means pricing. Just think pricing, right? And so basically they're saying it's going to help lower pricing for first-time buyers and borrowers facing higher fees due to down payment or lower credit scores, right? And so think first-time buyers, think low to moderate income, think 3% down, think all the stuff you think about when you're thinking about, the folks that probably need it most, the people that are just entering the market. It's going to be more affordable for them. Well, it's going to be more expensive for someone buying second homes and high balance loans, right? Which in a lot of areas of California, that's between 647 and 970, depending on the county you're in. Charge those people more, make it more affordable for first-time home buyers. You can't necessarily say that like that's a terrible idea, because maybe that is something that's needed, right? Let me see if I could jump to this other article. This is one talking about the framework, talking about how this represents another step that FHFA is taking to strengthen their safety and soundness, to be able to ensure access to credit for first-time buyers and low and moderate income borrowers. Exactly what I've seen and heard from FHFA. It's important to this administration. It's important to this agency. And so that's what this is. How much it's going to affect you is going to depend on the product, right? That big swing for second homes, or if you're putting 10% down, you're going to pay a full point higher in rate, or going to pay 4 points to get the same rate, is not so drastic when we look at what they're going to do for high balance loans. High balance loans will increase between 0.25% and 0.75%. In mortgage speak, we call that 25 bips, 75 bips, and 100 bips is basically 1%. So 75 bips is 0.75%. It's going to be tiered by loan to value ratio. So depending on this high balance loan, whether it's at 95% or 90% or 85%, it might be a different hit. The 25 basis point to 75 basis point is probably a quarter at most in rate, closer to an 8 in most cases. So it's not a huge difference, but it is something, right? And so in closing, I think what I want to remind people of is this stuff is all set to change April 1st, 2022. And that's when the fees go into effect for deliveries to Fannie and Freddie on April 1st, 2022. Know that a lender can see this on January 5th, which is the day I think it was written, and decide, hey, listen, on anything we originate or close in February and March, we're going to adjust our rate sheet. Some of them might do it this week. Some might do it next week. I don't think many of them are going to wait until March to have these pricing adjustments on their rate sheet. They don't want to get caught holding the bag, right? So if you're in the market for a second home, I'd like to get your loan locked, right? If you're in the market for a high balance loan, it's not something where you're going to be as rushed because it's a smaller hit, but for sure second homes are being hit. Another thing to keep in mind is this is partly a function of all the Airbnbs I saw being bought as a second home, which is perfectly legal, right? You're buying a house in Tahoe, you're buying a house in Santa Cruz. It's going to be a second home. You just happen to, Airbnb it 46 or 48 weeks out of the year. A lot of those were being written. I'm sure that they saw, increased number of those, not only because people like to buy second homes and offset the cost of that by Airbnb in it, but with, COVID, it was probably even more common where people said, oh, it's a good idea. I can go live and work there 4 weeks, 6 weeks, 10 weeks out of the year, Airbnb it to offset. So I know I was writing more of these. I know a lot of people were writing more of these types of loans, and, they saw an opportunity where, these people want these loans. We'll still continue to provide them and to offer them. We're just going to charge a little bit more. Use that to expand programs and, pricing incentives to first-time home buyers and these folks that we're trying to serve. So that's that. Any questions at all, please feel free to reach out. Me and my team are more than happy to help. Matt, I was going to give you my email address. You don't want to email me. You'd be much better served. Go to greatmortgagebroker.com, fill out a form, where you're at, how we can help, and we'll be in touch shortly. Again, greatmortgagebroker.com. Thanks for watching, and until next time, we gonna see.